What's going on, guys? Welcome back to the channel. It's your boy Octavio Options back again with another YouTube video, guys. And today, guys, I'm gonna be teaching y'all some risk management 101, how to properly use risk management in trading. I'm gonna go ahead and read y'all the list. I'm gonna go ahead and give y'all some examples, and as well a trading 101 risk management to reward risk versus reward compared to win rate. This is something y'all need to know, right? And as well, just a couple more things. But if y'all want to see more videos like this, y'all make sure y'all drop a like, subscribe, guys, and let's get into this. If you have any questions, comment down below, guys. We have a free Discord, free trading Discord, guys. We have about 112 members in there right now. Clap it up! Woo! We're growing, boys. We fucking growing, and it's been like 3 months, 2 months, 3 months since I started that Discord, and we popping off. Fucking bank today, boys. Go check out the profits. Go check out what we trade today. I believe it's Tesla in the video and Starbucks. Shit was crazy bank, boys. So let's get into this video. Hope y'all enjoy this video. Like and subscribe. Okay, guys. So risk management for trading options. I wrote this, did this all myself for y'all. Just give y'all a rundown about how to use your risk management and how to properly use it in your trading, and how to apply that in your trading plan. So, you know what I mean? Set a stop loss order, guys. Establish clear stop loss orders to automatically sell an option at a predicted mint price. Limit potential losses. So what that means is you want to set your stop loss, whatever percentage risk to reward ratio you're using. A stop loss is if like the market comes down to touch that stop loss, that low, and it wicks you out, like it goes under that low, that you'll be stopped out. You'll be out of the, if you just end up going the wrong direction, you'll be like just stopped out automatically without putting a fill order, market order, or whatever you're doing, right? So diversify your portfolio. Spread investments across different assets or sectors to reduce exposure to any single risk. That's key. Use hedging strategy. Employ hedging techniques like buying put option to protect against adverse price movements. Understand the Greeks, guys. You gotta understand the Greeks for the market, guys. Familiarize yourself with the Greeks delta, gamma, theta, and vega to better anticipate how your option credit spreads will change with the market movements, right? Regularly review your trades, guys. Frequently review all and adjust your positions based on market conditions and your risk tolerance. So you wanna regularly review the market you're in and the trade you're in, and if you're getting into the money, move your stop loss higher to break even. And if you know the market keeps going higher, move your stop loss to above break even, for you can bank in some trades. I mean some gains if you get the market wants to go back reverse the other way. You at least collect some kind of gains. Stay informed, guys. You gotta stay informed with the market and the market forex news. You can use forex factory for that. I use that to for my news, for the stock market news. Keep up to date with the market news and trends to make informed trading decisions. See how that says informed trading decisions? Informed trading decisions, guys. Remember that. Limit position sizing, guys. Avoid over leveraging by limit the sizing of individual position relative to your overall portfolio. Guys, if you're going crazy buying 3 contracts and you can't even fucking trade that, try 1 contract, bruh. Limit down, guys. Use less of your position, not position, of your individual account for that one single trade. You know what I mean? Use risk management tools. Risk management software and analyze tools to monitor and condition your exposure. That's a great tool. Risk management. So you have 50 wins here times per 1,000 trade. So you have 50 wins. Each one is $1,000 per trade, right? It's a profit of $1,000 per trade, right? That's an equal total of 50K per trade. Well, like all in total and 50 wins, right? You got 50 losses per trade. You lose 500. That's only losing 25K. That's half of your 50K. You know what I'm trying to say here? So like you can use that 500 as a stop loss and you lose half of that and you'll be like saving 25K above that. You know what I'm trying to say? That's just a 100 trades within a 50% win rate and 2-to-1 risk to reward nets you a 25K, right? So, risk what you can risk, guys. Define trade risk. Concepts clearly determine the amount of risk you're willing to take on each trade. Set a maximum loss limit for each trade, typical as a percentage or trading capital, or a fixed dollar amount. For example, risk no more than 1 to 2 of your total trading capital on any single trade. That's single trade, guys. Set a stop loss order. Use a stop loss order again, guys. I'm telling you about the stop loss orders. You gotta use this, guys. If you're bugging now and you're just holding because you want to see a reversal, you're bugging out. You just put a stop loss. You're in and out, bro. If it goes the other way, it goes the other way. Just try tomorrow, bro. The market's always gonna be there. So just if it doesn't work that day, just take it the chance. Next day, just save your portfolio and just diversify it. Right, guys. So establish profit targets, guys. You have to establish your profit targets, because if you don't establish your profit targets, what are you gonna target? When are you gonna know when to sell? Where are you gonna sell? You know what I mean? If you're in profit and like we sweep highs without you knowing, and we sweep lows to reverse down lower, you're fucked because you don't know when to take profit. You know what I'm trying to say? What you can actually do is like use a so say like for like every trade, no matter what, if the trade hits over 75% through 100%, you're gonna take out 75% of that trade out. So you say go in with three cons, 75% of that would be selling two cons at that high, and you'll be riding with one. You know what I'm trying to say? So establish target, guys. Concept: define clear profit targets to lock in gains and exit to the trade when objectives are met. Implement, guys. Implement. Set profit targets based on technical analysis and predicaments, risk reward ratios, guys. For example, aim for a risk to reward ratio of at least 1 to 2, risking 1 to potentially gain $2. For example, you're risking $100 in that trade. You better be expecting to make not 200 but 100. Even that shit out. You know what I'm saying? And if you can make that 200, even that, like match what you made on like what you used to get into that trade, that's even better. That's a 2-to-1. That's even fucking better. Use proper risk management, guys. Concept: determine the size of each trade based on the risk level of capital, guys. Implement. Calculate position sizing. That's just using a calculator for your options, calculator for your forex, calculator for your futures, whatever you're trading, guys. Use a calculator for that. There's websites out there that you can calculate that your percentage and put your portfolio size and just and it will just set your automatic portfolio size you should be using. Determine the size of each trade based off the risk level of capital available. Implement. Calculate position sizing using formula using incorporates to risk per trade and the distance between entry and stop loss levels. For example, risking 100 per trade with a $5 stop loss, buy 20 contracts. Boom, there you go, right? Monitor delta and adjust accordingly, guys. Concept: manage the sensitivity of your trade to change in underlying asset buys and asset prices. Use spreads to limit risk, guys. Concept of this limit risk. Employ option spreads to limit potential losses of that controlled risk, guys. Implement vertical spreads, iron condors, or multiple leg strategies to cap losses and reduce the impact to that invest moment in the underlying asset. Consider implied volatility, guys. There's a lot of shit ton of volatility going on right now in the market. I don't know if y'all seeing what's going on, but We are under a huge squeeze under the ES, Qs, and SPYs. We are just absolutely, it's a fight within the buyers, the bears, and the bulls. Factor in the impact of the volatility of the option price and the risk, guys. You gotta like see the risk and you gotta see the volatility within the risk of your option contract. Analyze the implied volatility and use strategy that benefits from or hedge against volatility changes. Adjust your position based off volatility forces forecast. And then right here you have a trading 101 risk to reward compared to win rate. So right here you got 20%. You got a one to one. If you're trading a 1-to-1 and you make 20%, you're not making nothing off of that. You're making something, but it's not gonna be profitable. If it's 1-to-1 and you make 30%, it's not profitable. If you make 1-to-1, it's 4, not possible. You know what I mean? Like the wins are just too small. You have to like at least get over 50% if at least you do a 1-to-1. And it tells you right here, it's profitable if you hit a 1-for-1 for 60%. You know what I mean? And this just kind of graph right here for if you want to hit a 2-for-1, not profitable in 20%. You have to hit it higher than 40%. I mean 30% to be profitable in a 2-to-1 risk. Right here you got your risk to reward ratio right here, 2-to-1, 1-to-1, 3-to-1, 4-to-1, 5-to-1. You got your 20%, 30% within that trade, 40%, 50%, 60%. So I'm trying to say 5-to-1, profitable 20%. Boom, bang, in and out. Don't get liquidated though. But you kind of get the concept of this, guys. This is all in the Discord, guys. Like I said, join the fucking family. We are growing like crazy. Share the Discord, guys, and let's get to fucking work, boys. Let's get this bread. Let's get this shit, and let's get this work, boys. Check for liquidity. Ensure that the liquidity in the option being traded to avoid slippage. Look at bid and spreads and opinion interest on the options. Avoid trades with wide spreads or low option interest, which can lead to unfavorable executions. That's very big. Look for big spreads within ask and the bid, and if it's too big, too like the spread is too big from the ask and the bid, if it's too like the gap in between is too big, don't fuck with it. Monitor the Greeks, guys. Monitor the Greeks concept. Keep track of Greeks, delta, gamma, theta, beta. We already talked about that. Like I said, guys, you want to keep looking at that gamma, the theta, and the vega throughout the whole market. Or at least the option contracts that you're trading, delta. So at least I'm hoping you're looking at. Use the Greeks to judge the sensitivity of your trade to price changes, time decay, and volatility. Adjust your position to manage exposure to those factors. If you don't know what time decay is on your contracts, look that shit up. Cause it's gonna fuck you up in the ass if you don't know what time decay. Oh, I'm losing money because it's 2:30 and the market's about to close. Bro, it's time decay. Fucking idiot. You know what I'm saying? So get to it, bro. Come on, it's time to work. Use tailing stop loss. Implement tailing stop to protect profits while allowing for potential further gains. That's moving your stop loss higher. That's you moving your stop loss as the market moves higher. That's you following the market, like you moving, like they say this is the market, this is your stop loss. This is you moving your stop loss as the market goes up. You know what I'm saying? That's what you want to do. You want to move it as the market goes up. Trailing stop loss. Set trailing stop order to order that automatically adjusts as the trade moves in your favor. This helps to lock in profits while managing downside risk. Beautiful. Review and learn from trades. Concept. Analyze past trades to understand what worked and what didn't. That's really important to know what worked and what didn't, because you do not want to repeat your fucking mistakes, guys. Lock the fuck in. Keep a trading journal, guys. I keep at least 3 trading journals. I don't even know where I left them. Right here, this is one. Oh, there goes one page. But you can see I take hella fucking notes. Little by little, I'm gonna need a new one. But you can see, this is just one. And then I got another one right here. So this is my OG notebook I started with trading. See that? See that? Limit order, mark order. You see that? Resistance. See that shit? Rules. OG right here. OG right here. Alright. Anyways, guys. Avoid over leveraging. Be cautious about using too much leverage, which can apply both gains and losses. Ensure that the leverage you're using uses within your risk tolerance and capitalized limit. Avoid positions that excessively increase risk, guys. You do not want that due to high leverage. Not want that, guys. Remember, guys, stay within this trading 101 risk to reward ratio compared win rate. Beautiful, guys. Beautiful, beautiful. And capitalize on your portfolio, guys. Take advantage of it, boys. You can do this. Stay emotionally detached of the money. You do not want to be emotionally attached to the market or the bread, guys. That's very bad. Maintain objectively. Maintain objectively and avoid letting emotions drive trading decisions. Exactly. You do not want to get bugged out and then like for the market just to go right back up. Follow your predetermined trading plan and risk management rule without moving it or changing it while you're trading. You know what I mean? Stick to that plan. You're in it. You're in it. Okay. If it hits your stop loss, it hits your stop loss. Don't be, it's gonna hit my stop loss. Don't like chill out, bro. Get detached from it, bro. Cause you're gonna fear, and that's gonna just, it's gonna you're gonna feed the fear. I don't want that. Greed or other emotions, guys. You don't want that. You don't want to add any emotions, guys, even to any trades. Use your systematical approach to decision making, guys. Use your trading plan, like I said. And guys, this is it. Like I said, guys, this is the Discord we in, guys. This is my Discord, guys. We got about 15 members active right now, and we got all these other fucking legends that are in the fucking Discord, guys. We got about 115 people in here, guys. Make sure y'all join. We have a shit ton of free stuff. We got announcements, stock market news. I drop this shit on the daily. We got members here dropping market analysis over market analysis, guys. This is all completely free. Free. I ain't charging for this shit. And I got my YouTube, of course. And then we're dropping a podcast. Like I said, boys, we fucking dropping content. It's all free. Go join. We got the trading chat. And then we got futures trading. We are trading futures now. This is something added I added to today. And I'm trading futures now, boys. This is big. New step. So let's get to it, and it's time to work, boys. I'm doing options and futures now. And we always dropping chart levels. As you can see, we charted out on 811 for the QQQs levels for us to hit 467. And that day, look, we also tried up SPY, we tried up IWM, and that day, 811, look where we hit. SPY went from QQQs went from 450 all the way to 454. And that was already pushing above, breaking all these levels. See that? Breaking all that shit. And it still did a continuation move. Beautiful. We banked on some beautiful Starbucks. Look at that shit. EMA's crossing everything for we bounced off this point of control right here, so I just decided to take profit for a quick 53%. And then I took TP on Nvidia. Beautiful trade, over $700, guys, and then within this trade, over 460%. It's all in the fucking Discord, and we're all banking every single day. Someone made 120% off of Tesla puts this morning, $245. We got people here practicing, guys. We got hella members here. Look at this shit. 69%, $80. 75%, $80. Look at these gains. Crazy fucking gains within the fucking this, you know. And then we got my long positions as well. This is what I'm showing in long, and this is what I'm in long for. Like, this is what I'm long for. This shows my positions that I'm long in and what I'm holding for the expiration date. I'm long Intel right now, 27.50 strike for January 17, 2025. And I have 100 contracts, about 6.5k market value. We had the account challenge as well. We got free courses, banger information right there. We got a free indicator, guys, that I use since I've been trading or since I made it, and this just is fucking hits, guys. We got some members using it. You can just comment down below, guys, on the Discord, on the chat, and just ask them how it's doing, and they'll tell you themselves. We got free books and shit. Alright, so that's gonna be it for this video, guys. Make sure to drop a like and subscribe, guys. Thank you so much for watching, and deuces, peace out. Stick to your trading plan. Let's get hyped. Tomorrow's Thursday. Let's go, baby. Let's go. God bless y'all. And God bless y'all's dream. Peace.